You know, Bitcoin is supposed to be a decentralized currency. It only gets its value when Wall Street comes and starts pimping ETFs that give you access to Bitcoin. Wait a second. If it only has value because it's decentralized, it's no longer decentralized. If you own a Bitcoin or whatever cryptocurrency and you own it in an ETF, the government knows who you are and they can easily take that ownership away from you.
Good afternoon, ladies and gentlemen. Welcome back to the Black Swan Capitalist YouTube channel. I'm honored to be joined with Michael Pento, the president and founder of Pento Portfolio Strategies with more than 30 years experience. He's worked on the New York Stock Exchange during the mid-90s. Michael has served as an economist for both Delta Global and Euro Pacific Capital. Michael, it is an absolute pleasure to connect with you, and thank you for taking the time to be with me this afternoon.
Well, thanks for inviting me on the program.
We could take this conversation in any direction, just with so much going on in the world, but we might as well just start off with Trump taking office. And, you know, there are people in the space who do believe that he's going to fix all these problems in the economy. And I've been trying my best to educate our listeners that the motto really hasn't changed. They're trying to print more money already. They lowered interest rates just to make the economy look good. They're putting out fake data. And I don't think enough people are paying attention to what's really happening underneath the surface of everything. And the fact that we're even bombing the Middle East now to find our way out of a debt crisis and just a reason to print more money. So if you could please bring my audience up to speed and just describe some of the issues that you may be seeing in the US financial markets.
Well, in all candor, I voted for Donald Trump. I'm a libertarian. I thought I think still he'd be a far better alternative than Kamala Harris, who was an avowed egalitarian socialist. So what I mean by that, I back it up. I'm not just, trying to use hyperbole. Kamala Harris said that it's not enough to give people money who are in the lower echelons of the income spectrum. She wants to make sure that you give them enough money so everybody is equal. She wants to ensure equal outcomes. That was her goal, her stated goal, her avowed goal, and that's an egalitarian socialist who wants everybody to be equal. But this is a meritocracy. We want everybody to have a level playing field, the opportunity to succeed, not that we have to ensure equal outcomes. So I did vote for Donald Trump, but having said that, I know in no way am deluded into thinking that he's going to be a panacea. And the reason is because no matter who is president, even if you elected me as president, we're going to have some serious problems coming up. So if you look at things like the Buffett indicator, and that's the total market cap of equities as a percentage of GDP, it's 209%. The last time I looked at it was a few days ago. So 209% of GDP. If you look at it, what it was in 2007, it was 138% of GDP. That's when we had we didn't have a housing bubble in the year 2000. That was the NASDAQ bubble, 138% of GDP. In 2007, we didn't have a stock bubble. We had a housing bubble, but the total market cap of equities was 105% to GDP. But in both those cases, the S&P lost 50% of its value.
Right.
But now it's 209%, as I said. So we have, for the first time in history, as I like to tell people, a triumvirate of asset bubbles, a credit bubble, massive credit bubble, total debt, total non-financial debt as a percentage of GDP is at an all-time record high. And notice I didn't just say nominal debt, because nominal debt is off the charts. I'm saying as it's measured as a percentage of GDP, it's 260%. It's never been that high before. Right. Massive credit bubble, things like private credit never even really existed before. It's $2 trillion now. In 2007, it was like nothing, like a couple $100 billion. You have home price to income ratios that are much higher than they were even at the peak in 2005. and you have your equity bubble. So we never had all these things all three bubbles happen at once. This triumvirate of bubbles, and they're going to burst. And no matter who's president, it doesn't really matter. We also know that Donald Trump is a lover of a weaker dollar. He's a lover of debt. He's the king of debt. And that's not what we need right now in this country. We need stable money. We need
Right.
we do need lower taxes. We do need reduced regulations, but we also need stable money, and we don't have that. And the reason why we are, and if you're asking me, well, what made this era so different? And it's because since the year 2008, we've had the longest period of time in American history where real interest rates were negative. And sometimes they were negative by 8%. So basically, when you can't keep, what does that mean? That means when you're an investor and you have savings and your savings is paying less than inflation, you are losing money. You are going broke every single day.
Right.
And you are forced into assets. You're forced into real estate, you're forced into equities, and you're forced into other forms of credit. And that's why we've engendered this massive bubble. It's going to burst. And I don't care who is the president. It has to happen. I don't know of any case in history where bubbles burst innocuously and slowly. It just doesn't happen.
Right. It's like a really sharp decline. And I have been watching the BRICS nations very closely and central banks globally. This is what I do, really. And I've noticed that more of the central banks that are buying the gold are towards the east. They're buying like larger amounts of the gold. So I think that there's this shifting dynamics and price controls over to the east because, the US, we've been manipulating the precious metals market like never before. So is that something that you see happening in the near future? Because I know for a fact that gold does rise when fiat currencies do decline.
Well, what gold likes most of all is when real interest rates are negative. That's
Okay.
one of those assets that I was talking about.
Hmm.
And right now, real interest rates are positive. So while I do own some gold, I always recommend owning 5% physical gold of
Right.
your net worth. Always. Something that you should hand through your generations. That's your heirloom. But in as far as your investments are concerned, I recommend owning between 0 and 20% in what I call liquid paper gold. I mean,
Mhm.
you really don't own gold unless it's in your physical possession.
Yeah.
Because if you own gold in some kind of vault somewhere or an IRA, I don't understand that. You own gold because you don't trust the currency and you don't trust financial institutions. You
Yeah.
don't trust third parties. That's why you own gold. You don't trust the government. You don't trust banks. You don't trust the currency. You trust gold. And
Right.
if you don't own it, I mean,
It's
you
not
can't.
yours.
If there's somebody in between you and your gold, you don't own it.
Hmm.
And it's like same thing with Bitcoin. I was like, Bitcoin is supposed to be a decentralized currency, but it only gets its value when Wall Street comes and starts pimping ETFs
Yep.
that gave you access to Bitcoin. Wait a second. Well, if it doesn't have, if it only has value because it's decentralized, it's no longer decentralized. By the way, if you own a Bitcoin or whatever cryptocurrency and you own it in an ETF, the government knows who you are and they can easily take that ownership away from you.
Right.
So guess what? Your whole reason for owning Bitcoin is because it's decentralized. That goes away. So your whole reason of owning gold is because you don't trust the government, you don't trust currencies. You have to own it yourself.
Yeah.
And gold thrives when interest rates are negative and becoming more so. That is not the case right now. So while I do own some gold in my portfolio, it's not anywhere near 20%. That's the max. When you really want to pile into gold is after this recession becomes manifest, and then reluctantly Powell or whoever happens to head the Federal Reserve at the time
Hmm.
starts slashing interest rates back to zero and then goes back to QE and the balance sheet is 20 trillion, not 7 trillion. And then the Treasury Secretary launches helicopter money. That's when you want to really pile into gold, and I think it could go well north of
Yeah.
3,000, well north of 3,000.
Oh,
Maybe, I
absolutely.
mean, if you can tell me that a unit of Bitcoin, a unit, which is just 64, numbers and letters that don't even really exist, is
Hmm.
electrons. If that could be $100,000 a unit, and gold can be $10,000 an ounce.
Right. I find that very interesting. And me personally, I am a very deep researcher, and I've been researching into the whole financial technology space. There's a specific digital asset. It's called Tether, which is pegged to Bitcoin. And it would seem that actually Tether is the largest buyer of US bonds, which is offsetting the bonds that are being sold by the BRICS nations and other countries around the world. So there's certainly a revolving door between the US bond market, Tether, and the price of Bitcoin that is artificially inflated. You wouldn't happen to have any insight on that, would
No,
you?
I wouldn't. You just I don't know. I can't comment on that because I didn't know that.
Yeah.
I
Well,
just I do, and dovetailing on that philosophy, raising a bunch of debt to buy Bitcoin,
mhm,
and it's like a vicious cycle. I mean, there are companies out there that just are in the business of borrowing money to buy Bitcoin
that's right.
and driving the price higher. That I mean, when you actually, I want you to, if you don't believe me, just ask somebody, just anybody.
Mhm.
I bet if you asked 100 people what Bitcoin is, what it actually is, they won't have an answer for you. They just
I
don't. I
guarantee
don't
it.
know. I don't know what it is. It's just going up. It's just going up. And here's the thing. Since I'm guilty of mentioning Bitcoin, you didn't, so I'm not blaming you. So I'll take all of the hate. But let
Okay,
me ask you,
good.
if Bitcoin gets its value because there's a limited supply, right? There's 21 million units of Bitcoin. Oh, it's rare. It's digital gold. It's more rare than gold because gold, I guess if you dug to the center of the earth, you'd still find some gold. Or maybe a rocket ship to Pluto, maybe there's some gold up there. Might not be able to get it back to Earth for $2,000 an ounce.
Good
But
point.
but it's exploding stars and 21 million units. But here's the, and nobody has ever, I would love Michael Saylor to call me up or send me an email, tell me why is it that since there's an unlimited number of blockchains that can be created, right?
Mhm.
And there's therefore hence an unlimited number of coins that can ride along that public ledger, right? What makes Bitcoin so different? What makes it? I know it's first to the ecosystem and it's got more exposure, but really intrinsically there is no difference.
Yeah.
You have a coin that rides along this public ledger that everybody can see that's immutable and it's decentralized. Well, and anonymous. Well, there's an unlimited number of those things that can be created. So it's as if to say, if I told you, well, gold is an element, AU, on the periodic table, and if I told you there's other elements that are being discovered, they're not gold, but they're very rare and virtually indestructible, and there's like 10 of them being discovered every day.
Mhm.
Well, it wouldn't, be more gold, but it would dilute the idea of gold.
Right.
There is other metals out there we didn't know about them that are very beautiful and extremely rare and virtually indestructible. That would attenuate the value of gold because there'd be
Mhm.
more competition, right?
Yes.
You
Very
follow
good
that.
point.
So I just I don't know why I I blame myself again. I'm off on a tangent, but the
Mhm.
gold is gold, and Bitcoin is Bitcoin. Bitcoin is something that I think in the recession that's coming, and I could tell you why the recession is coming. It is coming. I don't know. I can't
Yes.
give you a date, but it is coming. Bitcoin will get destroyed,
I
in my
agree entirely. And I think that's very insightful what you put out there. In fact, a lot of our listeners are going to appreciate this. So, very interesting comments. But there is something else I really did want to discuss with you. There's this technology my brother and I have been teaching for the last 5 years. In fact, we've been teaching this to some of the wealthiest investors in the United States. It's a specific digital asset called XRP, which stands for a cross border remittance protocol. And we have enough evidence and documents to support that almost every central bank on the planet and payment provider and financial institution has actually been building the rails on top of the traditional payment system using the technology that's sold by Ripple called RippleNet, which leverages, again, this digital asset called XRP to solve the cross-border currency issue while keeping the currency still stabilized. Therefore, economies could actually become stable. And more importantly, the technology enables central banks to tokenize physical gold reserves at the central bank level. That's your Basel III requirements by the Bank for International Settlements. So I know it's a lot of information, but this is going to allow them to effectively solve the cross-border payments issue while going back to some sort of store of value like gold, right? Would you happen to have any insight, information on Ripple or thoughts even, or what they're trying to accomplish by
Well,
solving these problems?
yeah, I mean, listen, the last thing a government is going to want to do is attach their currency to either a Bitcoin or gold.
Mhm.
I invested in a company that was basically a private blockchain that was backed by gold. And it never caught fire because just the regulators will never let it happen. I
Right.
mean, why would a central bank fetter themselves in that way if they weren't forced to do it? They want to have that elasticity.
Yeah.
So that my input, you might not like to hear it, but governments like 100% fiat currencies that the central bank controls. That's what
Right.
they like, maximum flexibility.
Like a
So
CBDC.
a central bank digital currency, which would be disaster,
Mhm.
absolute disaster, not linked, a CBDC that's linked to nothing,
Yeah.
nothing. It just means that you are now unable to hoard cash. So in other words, what they could do then in a CBDC is the central bank could say interest rates in a nominal sense are now negative 3%.
Mhm.
And in a normal environment, you can go to the bank and withdraw all your money. Because after all, why would you keep your money in the bank if you're going to lose 3% a year, right? It wouldn't make any sense. You could hoard cash. But if there is no such thing as physical currency and coin in existence, if that is outlawed, the only thing you can do is either have your money in the bank or spend it. Those are your two options.
Yeah.
And that way they can get inflation going. And that is, but I believe, God forbid that ever happens.
Mhm.
So they'll have plenary control of the money supply, plenary control of your money, and plenary control of interest rates without any repercussions that, without any way of you protecting yourself.
Right. Basically, they want to keep the friction in the system. The friction is what gives them the flexibility to influence economic conditions upon us. In other words, yeah.
It enables them, this is what it enables them to do. It enables the government to spend money on pet projects and wars or whatever they want to do. And the central bank essentially warehouses, purchases, puts on in cold storage those bonds. The Fed's balance sheet, by the way, went to $9 trillion from
Yeah.
$800 billion. So what is the Fed's balance sheet? They print credit, they create money by fiat, by decree,
Hmm.
and they buy bonds and they warehouse them and take them out of the public's realm and place them on their balance sheet. And
Yeah.
sometimes that's mortgage-backed securities and corporate bonds too, um, which used to be illegal now, but now it's emergency measure. We can do it. The government can do anything they want in an emergency.
Yeah.
Unfortunately, I've learned that um, they have
In 2020.
yeah. I mean, it's an emergency situation, so we'll be able to buy corporate bonds, junk bonds, whatever they want. So the Fed's balance sheet can grow, and the price discovery then for these bonds is removed because the Fed doesn't give a darn what they're buying. I mean, they'll buy bonds all the way until they yield zero or negative. They don't care. It just stays. Central bank can't go bankrupt because they have a printing press. How could you ever go bankrupt if you could just print all the money you want? They just destroy the purchasing power of the currency. That's why every fiat currency ever in existence has gone to zero. And I think we're down. I think we're like 98% of the way there. So
Yeah. Yeah. The only thing, little pushback on the devil's advocate on the XRP ledger or the XRP itself is that it does bridge the currencies. It does solve some of the problems, maybe without going all the way full throttle, like going back to gold, for instance. But then I found something else very interesting, and that is I've been doing research into the bond market as well. I do report on this very closely and listen to what some of the central banks have openly spoke about. And when we're talking about some of the documents that I'm going to send you after this call here, the Treasury Department was actually talking openly about tokenizing their bonds on a distributed ledger technology. And again, this kind of ties me back into what Ripple is doing since they're working with all the central banks. Judy Shelton was talking about having, I believe it was convertible, gold-backed convertible treasury bills, which
Mhm.
could be a potential solution. And she openly talked about this. And I'm just here trying to bridge all these dots together, right?
Yeah, but here's the thing. Why didn't Trump nominate Judy Shelton for Treasury for Fed chair?
Recently, right?
Yeah.
Yeah.
I mean, he's happy with Jerome Powell. I mean, Trump knows that what at least people around him are telling him that they have to maintain maximum flexibility with the currency and with the
Yes.
debt. So I'm sorry, I just don't see it happen. You'll see it happen. You'll see a real change happening in this country when we have hyperinflation.
Yeah. Like later on when there's a need for the motto of a solution, and it will be
Right.
predetermined already, most
Yeah,
likely.
and the people will demand, people will understand, hey, I don't care if the stock market doesn't go down, and I don't care if my 401k doesn't go down in nominal terms, but it doesn't buy me anything anymore. I've
Yes.
been wiped out through inflation. It doesn't make any difference if the stock market drops 50% in nominal terms, or if the purchasing power of the dollar goes down 50%. In nominal terms, it stays the same. It doesn't make a difference. You lost half of your money.
Basically.
That's the math behind that. So it doesn't matter.
Hmm. Okay. Well, final thoughts. Maybe you can bring us up to speed on what the BRICS nations are doing. Are you keeping up with that?
Well, it's an inexorable trend away from the U.S. dollar. I mean, current countries no longer want to have the dollar hegemony. Um, their sanctions and the confiscations of their wealth and their savings are no longer going to be are being parked in dollars and treasuries. It gives the government too much, U.S. government too much control over their wealth. So their trade surplus is being recycled into gold instead of treasury bonds. And that has massive ramifications to the price and yield of our bonds, especially in the next recession. In the next recession, there's a very credible chance that the U.S. annual deficit will be $6 trillion.
Yeah, it's insane.
That's
Unfathomable.
that is absolute insanity. And who's going to buy it? The only person that's going to buy that at a yield that's anywhere near 4%. I mean, you can't have. And here's the thing: the Fed is going to be the buyer of last resort. Their balance sheet is going to go to $20 trillion. We're going to have double-digit inflation. And then let me ask you this: who is going to buy, other than the Fed? Who is going to buy a 10-year Treasury note that's yielding 4% when inflation's 12?
Tether. Just kidding. Who knows? Because there is that revolving door. I've been reporting this for years and I've been so far accurate. There could be something there. I just find that very interesting. But that's a rabbit hole topic. So, okay. Well, it has been a pleasure talking to you. I know you're very busy and I'm just grateful you gave me some of the time. So, maybe some final thoughts for our listeners out there. What do you think they need to be looking out for as we approach the new year?
Well, I just hammer home that passive investment strategies just don't work when you have stocks and bonds in a bubble at the same time. And 2022 proved that very clearly. And people could say, well, the Fed's got your back. They're just going to lower interest rates. I'll point to the fact that the Fed already lowered interest rates on September 18th by 50 basis points,
Yeah.
and mortgage rates jumped and yields jumped across the entire yield curve from twos all the way out to 30s. So um, I I will caution people who just say, well, the Fed has your back. They are going to cut interest rates and everything's going to be fine, just like every other occurrence since 1987. I don't believe that's going to be true. It's not
Yeah.
necessarily true.
Yeah. And people need to watch out for inflation too. All this is going to cost a lot of money. So, yeah. Well, Michael, it's been an absolute pleasure, and I hope we can do this in the near future again, maybe after the new year.
My pleasure.
Yeah.
Have a good
Thank you, Michael. It's a pleasure. Take
Yeah.
care.